Hi, it's Christy, your loan superhero. Thanks so much for being here with me. And in this video, I'd like to talk about 5 things that make a VA loan very special. So if you are eligible for VA benefits, then I want for you to know you have the ability to qualify for 100% financing. So that means that with the VA loan, it covers the entire purchase price or appraised value of the home purchase, as long as it's going to be your primary home. And this benefit never expires, so it's really exciting. One side note that I would like to share with you is that it doesn't cover closing costs. Now, if you're talking about a refinance, it's a different product, and that would roll in the closing costs. But for a home purchase, you still have the cost of doing business. So make sure, if your goal is to have $0 out of pocket, which is possible, that you're asking for the sellers to cover X dollars or X percentage of your closing costs. A really good rule of thumb is for most purchases, about 3% of the purchase price will cover closing costs. But if you get with your loan officer and get a list of what those costs are for that specific home, then you should know pretty close to the dollars of what you're looking to ask for, and you can make that part of your offer. So that way, when it becomes a contract, your closing costs are paid for by the seller on your behalf. So number 1, your benefits never expire. Even if you were buying your first home and you're 95 years old, it doesn't matter. The benefits never expire. There's no age cap, anything like that. So that's really exciting. Number 2, you can use your benefits over and over and over again. So it is for your primary home, but if you bought a home with your VA eligibility and you retain that home, but you move to a different home and that's now going to be your primary home, there should be enough eligibility in there that you could be able to qualify for 100% financing for that next home. It really does depend on the loan amount. There's some things in there to be aware of. But if you were to buy your first home now and then sell it by your next home, you can qualify over and over and over again. So it's not like just a one and done. Third thing to know is you can have lower credit scores and still qualify for a VA loan. It's much more forgiving than a conventional mortgage when it comes to your credit scores. So depending on the lender that you work with, and quite frankly, at the time of this recording, it's during COVID, so the credit score requirements have increased just a little bit, but normally speaking and written into the guidelines, you could be in the 500s and still qualify for a VA mortgage. Also, there's a lot more leniency when it comes to bankruptcies, foreclosures, short sales, any kind of those derogatory events. So you literally have to wait 2 years past one of those derogatory events before you might qualify for another VA loan, where conventional mortgages require somewhere between 3, 4, and 7 years, depending on which derogatory event you're referring to. So there's a lot more leniency. I will say, side note, if you wind up getting foreclosed on with a VA mortgage, your entitlement might be reduced by the loss incurred by the VA, but there might still be eligibility there left for a future VA loan. You're going to have to do a really good job explaining why that was a one-time event and it would never ever happen in your life again, so that you don't look like a risk loaning money to. Number 4, a surviving spouse of a veteran can be eligible for the same VA benefits with a mortgage loan as the veteran themselves. Now, what isn't included is the heirs or the children, the next of kin of the veteran. So if you had a parent or grandparent that served in our military, that wouldn't allow you to take on their benefits. Only the veteran and their spouse, or the surviving spouse of the veteran. And lastly, and my favorite part of this all, is there is no mortgage insurance. So if you were to finance greater than 80% on a conventional mortgage or any amount on an FHA loan, you're going to have mortgage insurance. On a VA loan, there is no MI. Now, there is a funding fee unless the VA sees that you are disabled. If you're disabled in their eyes, that funding fee, there's a really good likelihood that that is removed and you don't have to pay a funding fee. If you're not viewed as disabled, then there is a chart based on the first time that you've used it, if it's a subsequent use, if you're putting down 0%, 5%, 10%, or greater. I'll put a link in the comments of where you can find that chart. So that way, if it's important to you, you can see what's getting added to your base loan amount. It's not out of pocket, but it is added to that loan amount. So if you're buying a $200,000 home and you're financing 100%, it would be that $200,000 loan amount plus that funding fee added, and then that's what your principal and interest payments will be based off of. In addition to not having mortgage insurance, and a bonus to a VA loan is that your interest rates are typically much lower than on a conventional mortgage. So literally VA loans have the lowest interest rates out there. It is still dependent on your credit score and the lender that you choose, but generally speaking, comparing a VA loan to a conventional loan, VA loans win every time when it comes to the interest rate. Thank you so much for being here with me. I hope this shares the information that you were seeking. If not, put it in the comments and I'm happy to respond to you. I've also got a lot of other videos on this channel regarding different loan programs, so reach out if I could be of assistance to you. And until next time, my friends, stay well.